Good morning, everyone. Welcome to the PivotBoss Pre-Market Report for June 7th, 2016. I'm Frank Ochoa, aka PivotBoss, with analysis for the session. Here's a look at the ES in a daily time frame here. You can see that price pushed beyond the previous week's high of 2106, reached an overnight high right now of 2116, and is now back off that level into 2112 half. And the early idea right now is to watch for signs of rejection above 2106. Remember, if price cannot maintain acceptance above that zone, we could be looking at a swift return back toward value being 2061 composite VPOC. Obviously, there's more to be seen until that happens, but we have what could be at least an impulse range that's developing here. You can see this low, and you've seen the slingshot move up here. We haven't seen a rejection day just yet. This is what could materialize here over the next day or two. But if we do see a rejection day up here, that could at least open up a move back to the midpoint of this range, thereby creating a key range that we can watch for the upcoming period of time. Again, we're in the very narrow portion of the profile here, and if there is rejection up here, then that would typically imply a return to value. So early on, we're still looking for signs of rejection above 2106. If this becomes a rejection day, which right now it's still in the air, obviously, we could be looking at a nice reversal, at least back down to 2085, with a shot at climbing all the way across the range. If we take a look at the intraday time frame for the ES, you'll see right here that price is above 2115, which is the 100% expansion target from the key range that we drew out previously from 83 to 99. That's the 100% expansion target. So we fulfilled that range. I'm going to go ahead and take that key range off now and draw up a new one. So we'll be seeing how this thing continues to play out. There's a little bit of an impulse move here that's played out. If we drop down into a lower time frame here, into a 5,000 volume bar chart, you can see we've had an aggressive move from the overnight lows up to the recent highs, and we're already coming back down toward the midpoint of the session. So once we reach 21.11.5, that could be a very nice key range to watch for the day, and that could set us up for the upcoming period of time here. Now, one thing to keep in mind is after we saw rejection up here, we've dropped down below the overnight pivot. That's also overnight VPOC there at 2114. That's going to be important because if price bounces and this area becomes offered on the second attempt here, that could be a quick move back across the range into the previous sessions close, 2103, with a retest of the 2107s. So this is going to be very important to see how this plays out. Again, remember, this could be a rejection day that's developing, but we have to see how it plays out. So this is going to be very important, 2114s. After 2111 is hit, if this thing goes offered here, there could be a quick move downward back toward the previous session's close and the previous week's high of 2106 for a big time retest. All right, let's take a look here at above, the price is above the overnight pivot, because if price does push through overnight VPOC here and pushes higher, then 2120 is going to be the primary target for the day based off of ADR. So that's the 10-day ADR primary target there. All right, here's a look at crude oil now. Crude has continued to be bullish, obviously, and we've continued to see this thing hold above the LVN at 47.22. This is also the previous month's high here. We mentioned before that once price pushed through this high, we were looking for bulls to defend here. And once price came back and defended, the expectation was that we would likely climb to the other side of the LVN above the recent HVN, which would be 51.65. So there it is. That also coincides with the 51.40 primary weekly bull target. So based off the current week's low, this right here becomes the primary target for the week. So right now, it's very clear where the key levels are in the charts. Again, 47.22 is a major. LVN 47.46 is a major key level from the previous month's close. All that still becomes an area to defend for bulls for a climb higher. Should this level give up, that's when a potential reversal could occur, as all of these participants here would have gotten long and failed to get paid. So right now, it's still an uptrending market, but prices need to be paid above 51.50. And of course, if we do see a push higher, the expectation would be for a continuation toward the 55 HV and above. So overall, this thing continues to be bullish, but it is clearly slowing down. Clearly slowing down. We've had some nice swing moves up and down, but now it's starting to get much, much more tighter. And if this thing doesn't see any steam here to the upside, all of these stops could come out below 47.22, in which case we drop back toward 43s. On an intraday basis, crude oil pushing higher right now. We've already reached the primary target on the day. So this is the second day in a row where we've reached the primary target heading into the RTH open. So 50.36 is the primary based on average 10-day range, and we've reached it. So now the expectation would be if price can hold above 50.10, which is the previous week's high, we could see a follow through toward the 100% expansion target, which is 50.67. So that would be an average range day for the last 10 sessions. So right here, watch the previous week's high. Bulls want to defend here for a squeeze into 50.67. Failure to hold the previous week's high opens up a return to 5-day VPOC at 49.71. Here's a look at gold in the daily time frame right now. What we mentioned before was bulls wanted to defend 1208s. This was a rejection day here. After the rejection day, you can see 1208s were defended very cleanly, and we saw a big time squeeze through 1236, which at the time was composite VPOC. We've now had a shift up to 1238.80 as composite VPOC. Should price come down a little lower, you'll probably see it shift right back down. But the expectation was that if price comes into 1236 half, or even as low as 1228, that's a zone where bulls want to defend this pullback for another squeeze higher into 1267 to 1275. And that zone right there coincides nicely with the current primary weekly target of 1270 if this low remains intact, which it probably will not. You'll likely see a little bit more downside, which means this will come down a little bit more. Once we see a low, this primary target will be firmly intact and we'll have something to shoot for. Let's take a look at the NQ. Here's the NQ. This one, obviously, we talked about the fact that this was a very tightly coiled range, 4,400 down to 42.71. Very tightly coiled range. If we saw expansion through 4,400, we were looking for a move to 45.50. There it is right here. We've basically, for all intents and purposes, reached that upside target. And what I mentioned was once we reach that zone, we're likely going to auction all the way across the range again and perhaps form a distribution between 4,400 and 45.50. So right now we're testing the edges above the multiple day range here, and we're overnight prices here have seen a rejection so far. So that rejection could lead price back across the range. What we've seen here is kind of an expanding ripple as well. New highs being rejected, new lows being rejected. So with this new high potentially being rejected, we could slingshot ahead and take out the lows below this previous low. So we could be looking at a move back toward 44.75 and perhaps even as low as 44.50. But again, this is what I mentioned before. Once you see a rejection up here, you're likely going to come back across the range and form some sort of trading range distribution in this zone. All right, let's take a look here at the intraday time frame. Here it is. This is something I'll be keeping an eye on because we've already reached the midpoint of the range. Here's the midpoint being tested just now. That seals the key range that we're looking for here. So the key range basically goes from this low of 45.20 half up to the recent high of 45.45 half. That's a nice impulse range with a midpoint again right where we're at, 45.30s, and that's something to watch out for now. We have the key level set. Another thing I'm watching out for is above this 45.40, we saw rejection. Another thing, the overnight pivot offered. Overnight VPOC offered. So again, if price were to come up to this zone, this is an area where bears are going to want to seal this zone and trap everyone that was long above it, and that could be a quick reversal all the way back down to 5-day VPOC, which is 45.2275. So that's going to be the path forward here that I'll be watching for. Again, the expectation was to watch for some sort of rejection on these highs, and right now prices above the previous week's high have been rejected, and any return to 45.38 and as high as 45.41 is going to be a zone that I believe the bears will want to target to seal those late trapped bulls and perhaps drop them back to 5-day VPOC and all the way back to the previous week's close of 45.09. So we could be looking at, again, something that comes up to here. This is where they defend, and then boom, there's one target, and then boom, there's the other. Based off of the current overnight high, the primary bear target for the day will be 45.12. So if you believe this high is set in stone and we're not going to retest that high, then your primary bear target on the day is going to be 45.12, which coincides very nicely with the previous session's low and also the previous week's close. All right, that's it for now. Let's see how this thing plays out heading into the new session. Good luck and trade well.